All right, great. Good morning, everybody. Good day, good day. I can see there's some new faces coming in here, and we have more new joiners coming in and more participants coming in. So if you're new with us, and this is the first time joining our free sustainability talk, please type in the chat that telling us that you're new and which country you're from, because this is me, Alicia, here live from Malaysia. All right, please type in your name and where you're from so that we know, get to know more about you. So we are starting sharp on time so that all of you can have a good lunch if you're from Singapore, Philippines, or Malaysia. All right, great, great. Good day, everyone, and thank you for joining us today. So we are really happy to have all of you here for this training session. And so welcome to the free sharing of today here, and we will talk more about the fundamental of carbon accounting in this session. So you will learn what carbon accounting really means in the context of today's reporting requirements and why it is critical for sustainability reporting, ISSB readiness, and the decarbonization strategy and how organizations measure, manage, and reduce their carbon emission effectively. So this is me, Alicia, talking to you here. So I will be the speaker for today, and I'm also part of the eco-sustainability team. All right, before we start, let's watch a video together. Great. So a little bit about us. So Eco Sustainability is a consultancy firm headquartered in Singapore with the presence in Cambodia, Indonesia, Malaysia, Thailand, and the Philippines. And so these are our influence, and the number kept changing and increasing. So Eco Sustainability is a consultancy firm across all the Southeast Asia, and our core services include sustainability reporting, consulting, carbon credits, training, and policies. So our core expertise is sustainability reporting. So we work across globally recognized standards such as ISSB, SASB, ISO 14064, 14067, 14068, covering everything from ESG disclosure to GHG reporting, carbon neutrality, and product carbon footprint. So in total, we work across 17 standards, including assurance. So our core expertise, okay, so we are standards contributor. So you might be wondering, what exactly is standard contribution? So let me make it simple for you. So first, there are standard setters. So the big names like ISSB, SASB, GHG Protocol, SBTi, and FERA. So they create the rules. And there are these standard users, which is the preparers who write the report, the auditors, the regulators, and the data companies. So they follow the rules. But there is a unique group of people that sit right in the middle. And that's where we come in as standards contributors. So what that means is we provide technical commentary directly to the standards setters, helping shape and improve their standards through exposure drafts and technical consultations. So in short, we don't just use the standards, we help build them backed by our real on-the-ground working experience here. So before we start, just a few quick housekeeping notes. This session will be recorded for internal training and improvement purposes. And please keep your mic on mute to minimize background noise. And if you've got a question, drop in the chat and our team will respond, or we will cover it during our Q&A session. And remember, there is no such thing as a silly question, and this is a safe space we learn with one another. And I myself we will actually keep the free sharing session to be a more fundamental understanding, so that everybody has this alignment and we will build up from there. So let's talk about the role of a GHG on greenhouse effect and global warming. So actually, many heard of greenhouse effect or GHG, but actually don't really know what that is. And I was one of them. So let me do a little bit of alignment because of the public, and we're not sure where is your knowledge level. So actually, the greenhouse effect is the way in which heat is trapped close to the Earth's surface by the greenhouse gases. So these heat-trapping gases can be thought as a blanket wrapped around the Earth and keeping the planet toastier and warmer than it would be without them. So the space is actually negative 270 Celsius. So without this greenhouse effect, the Earth temperature would actually below freezing. So it is in part a natural process and it's good. However, the Earth greenhouse effect is getting stronger as we add the greenhouse gases to the atmosphere, and that is the warming, the climate of our planet. All right, great. And so what does carbon accounting or GHG accounting measure? So for the GHG that we are tracking, is it actually a basket of 7 main gases, which is the carbon dioxide, the methane, the nitrous oxide, the hydrofluorocarbons, and the perfluorocarbons, and the sulfur hexafluoride, and the nitrogen trifluoride. So what actually it is, yeah, let me briefly explain to you. So the CO2, which is the carbon dioxide, is like the everywhere gas released when we burn coal, when we burn oil, gas, or even we drive a car. And methane is like a sludge gas from cow, also known as the cow's fart, the rubbish dumps, the rice field, the leaking pipeline. And N2O, nitrous oxide, is come from fertilizer, soil, manure, and some industrial processes. And the hydrofluorocarbon is man-made cooling gases used in air conditioners, fridges, and foam. And the PFCs is the industrial gases released from aluminium smelting and electronics manufacturing. And the SF6 is a fireproofing and insulating gas used in electrical switchgear. And the NF3 is a gas used in making semiconductors and also flat panel screens. Great. So, and all these 7 gases are being tested and measured for its potency over 100 years period, and we call it the GWP, global warming potential. So based on the IPCC AR6. So what is IPCC AR6? IPCC is Intergovernmental Panel on Climate Change, and this AR6 is the assessment report, which is the big official science report, and the latest one is AR6. So it summarizes all the scientific knowledge about climate change and what's happening, why it's happening, and what could happen next, and what can we do about it. So this GWP, I will cover it slightly deeper later. So all 7 greenhouse gases are converted into CO2e, which is carbon dioxide equivalent, because each gas traps heat differently. So CO2e gives us one common unit to compare and combine them fairly, so that we can do all the calculation using the same universal measurement. So in a simpler term, give you an analogy. So imagine you have a 50 imagine you have a 50 ringgit Malaysia, and another guy has a 30 Singapore dollar, and another guy has a USD $100, and another guy has a renminbi $200. So it will be very confusing. But if everyone converts to USD, then we all understand the value. So CO2e is the USD for all the seven gases. The E stands for the equivalent, meaning it's not CO2 itself, but it could be methane as well. So we convert into CO2, which is the USD equivalent. All right, let's move on. So share with you a term called above pre-industrial level before I share about this chart. So it refers to how much warmer the Earth is today compared to the period before the large-scale coal, oil, and gas burning began. So scientists use the year 1850 to 1900, 1850 to 1900 as the official pre-industrial baseline. So this period represents before major factories, before mass fossil fuel combustion, before modern transportation, before land use change accelerated. So it is the closest measurable reference point for the Earth's natural climate before humans changed it. And so the Paris Agreement in 2015 commits all the country to keep the global warming well below 2 degrees Celsius and try to limit it to 1.5 degrees Celsius above pre-industrial level. So today, we are already at 1.2 and 1.3 degrees Celsius of warming. And the year 2024 is already the hottest year ever recorded. And we already temporarily crossed 1.5 degrees Celsius at certain moments. So it's a warmer signal, not a permanent breach. Okay, so people will ask then, why 1.5 is a safer limit? And this IPCC AR6 shows at 1.5 degrees Celsius warming, extreme heat become more frequent, but still survivable with adaptation. Coral reefs suffer heavy damage, like 70 to 90% lost. Some crops decline, but global food system remain manageable. Flooding, storms intensify, but many regions can still adapt. The world is tough, but still livable. Then why the 2 degrees Celsius is bare minimum survival? Because from going 1.5 to 2 may sound small, but scientifically it is a climate cliff. So at the 2 Celsius warming, economic impacts, the global GDP loss will increase 3 to 4 times compared to the 1.5 degrees Celsius scenario. The heat waves reduce labor productivity, especially in the Southeast Asia. The insurance markets will break down in high-risk region, especially the flood zones, the wildfire zones. The food prices rise sharply due to crop failures in wheat, rice, and maize. The bio-loss, completely coral reef, 99% destroyed. The tropical forest peatlands face irreversible die-off. The wildlife migration patterns will collapse. Many species will lose their habitat ranges. The marine life suffer from oxygen loss and acidification. And the social impacts. Over 1.5 billion people were exposed to extreme heat waves every few years. Mass displacement from coastal cities due to sea level rise and higher spread of vector-borne diseases like dengue, malaria. So this is not an economy that adapts easily. So if we overshoot 1.5, the conversation changes. So the challenge will shift from reducing emission to surviving the impact. So the real question becomes, then who can adapt and who gets left behind? So wealthy countries can afford like seawalls, air conditioning, food reserves, but developing nations face higher death rate, deeper economic damage, and weaker adaptation infrastructure. And the vulnerable groups like the coastal communities, the farmers, the lower income population will face the worst impact. So this is why the IPCC described the 1.5 degrees Celsius as a moral threshold as much as a scientific one. All right, great. And this is a very interesting structure for you to look at. So it shows the warming indication with different efforts from now till year 2100. So it's like slowing down before hitting the wall. Let's take a look at the black line. A quick explanation to all of you here. The black line, which is the historical trend, which is the global greenhouse gas emission rose steadily and have not yet entered a clear decline. Okay, and the pink one, let's take a look at the pink one, which is where there is no climate policy, which is 2.1 to 4.8 degrees Celsius. So assume no country ever implemented climate policies. So emission keep rising sharply and extreme warming is extreme warming and catastrophic impact. All right, great. And let's take a look at the orange color. So orange color reflects the current policies, the current what we have right now, which is reflects the measure actually in place today. So the emission plateaus slightly, then declines slowly. And the world is currently heading towards the warming of 2.7 degrees Celsius, yeah? Still far above the Paris aligned level. And the pledges and targets, where we have signed the target, the agreement. So which is the blue one. If we keep within the pledges and targets, which is around 2 degrees Celsius, assume all countries fully achieve their announced target, which is their net zero pledges, the NDC, the methane cuts. So NDC is the nationally determined contributions, which are the climate action plans that countries submit under the Paris Agreement to reduce the emissions and build resilience to climate change. So countries are required to submit new, more ambitious NDCs every 5 years. And with the next round, called the NDC 3.0, which is due in 2025, which is already due, informed by the first global stock stake. So okay. So this gap is the ambition exists, but the implementation is insufficient. So let's take a look at the green or the teal color, which is the 2 degrees Celsius and the 1.5 degrees Celsius, which is the science-based pathway to meet the Paris Agreement. So which means the peak emission we have to peak the emission immediately and 50% reduction by 2030, which is coming soon, and net zero around 2050. And this requires much faster action than the current commitments. So what need to be done right now in the what need to be done right now in collective effort is to hold the increase in the global average temperature. So now let's everybody align is 2 degrees Celsius is bare minimum survival, and 1.5 degrees Celsius is safer and healthier future, but much harder to achieve. So the world is running out of time here. So do not let our planet heat more than that. So peak by now and fall by 43% by 2030. So carbon accounting is a way for a company to measure how much greenhouse gas it creates from its activity. So from using electricity to buying goods, to transporting products. And it turns all types of emission into one common unit called CO2e. And so that the company can see clearly of its total impact on the climate. And so by doing this, a company can understand where its emission come from, find ways to reduce them, and track improvement over time, and report the results clearly in its sustainability or climate report. So to keep it simple, so carbon accounting is like financial accounting, except it's for carbon. In simple terms, it tracks an organization GHG emission so that you can understand its climate impact, reducing the emission effectively, and report transparently. So we disclose GHG based on GHG Protocol, which is a detailed guidance on how organizations should calculate their emission across Scope 1, Scope 2, and Scope 3. So it standardizes definition, boundaries, and methods so that companies everywhere measure the emission in the same way, making the result consistent, comparable, and credible. And the GHG protocol is the foundation used by SBTi, by CTP, by many regulators and most companies globally for carbon accounting. So easy for you to remember, just remember 3B. The scope 1 is the direct emission, which is the energy you burn yourself. The first B is burn. Scope 2 is electricity use, which means it's the energy that you buy from someone else, which is the electricity company. And the scope 3 is the value chain activity, which is the everything that is beyond scope 1 and scope 2, which is everything in the supply chain. All right, burn, buy, and beyond scope 1, scope 2. Great. So on the 9th September 2025, the GHG Protocol announced a strategic partnership to harmonize and co-develop their greenhouse gas to aim to produce a common global language for emission accounting. So they are very similar, like cousins, to help streamline both standards and are converging and mutually recognizing each other. So if you're using ISO 14064, then the GHG protocol will recognize it, mutual recognition. Okay, so today we will talk about what ISO 14064-1. We have -2 and -3. So -1 is organizational level carbon accounting, -2 is project level, and -3 is verification and validation. So 14064-1, this part tells the company how to measure and report all their greenhouse gases. Let's go. So let's go step by step. Okay, I'll go here. So there are four steps. Let's go step 1, which is define your organizational boundary. So organization boundary simply means deciding which part of your company to include when calculating your carbon emission. It answers the question, which entities, sites, offices, teams, or subsidiaries belong inside the carbon footprint and which do not. So you choose this boundary using clear rules, such as whether you own, you control, or share control over an operation, so that the carbon accounting is consistent, fair, and reflect the real structure of the business. So for example, a warehouse is 40% owned by you, but you operate it fully. So you choose operational control. So most companies use this, especially the multinationals. So this is operational control. What is financial control? You choose this when you control the money. So you choose this when you approve the budget, you control financial risk, you make the investment decision, or you consolidate it in your financial accounts. For example, you own 51% of a joint venture and you control financial decision. So you choose financial control even if you don't run daily operation. All right. So this approach aligns closely with accounting consolidation. Let's take a look at equity share. So you choose this when the ownership percentage matters. So like for example, if you own 25% of an overseas plant and you report the 25% of its emission, even if you don't control anything, then you choose equity share. But generally, we use operational control. Okay, equity share is more common for investors and conglomerates. All right, great. So let's go to step 2. After you define your organizational boundary, let's categorize your source of emission. So just now I briefly explained about scope 1, scope 2, and scope 3. Now let's touch a little bit more on scope 1, briefly a little bit, because it's very important, even though we have explained many times. So scope 1 is direct emission from sources the company owns or control. For example, company facilities. The second one is company vehicle that you own. This one is very important. The second one is scope 2, which is the indirect energy emission, which is the purchased energy used by the company, which is probably the purchased heating, cooling, and steam or electricity. The scope 3 will be the other indirect emission, which is the all other value chain emission not included in scope 2. So it is also defined by the 15 categories in the GHG Protocol value chain. Great. So these are the example of the different source of emission. So from all the documents and information you provide, then we will identify the source. Then from there, we categorize them into different scope. Your company structure, where you operate, your utility and fuel use, what you have buy, what you buy, how your goods move, how people move, which is your travel and commuting, your logistic, how you spend your money, your waste and water data, your supplier information, your digital or IT footprint, and also your outsourced activities. This is the everything that we will track. So for every emission source identified, you must also define what kind of data it uses, where the data come from, and how reliable the data is, and where it needs to be estimated, and how often it will be collected. So this will be your step 3, which is the quantification of your GHG emission, because this is to ensure the accuracy, the consistency, and the auditability under ISO 14064-1. So the type of data used for carbon quantification, there are 4 main types of data that are required. Number 1 is activity-based data. So this is the physical quantity of the activity causing emission. For example, the mass, which is the kg of your waste. The volume, for example, the number of liter of your petrol used. The energy use, which is the kilowatt of electricity. The fuel properties, which is the fuel composition or calorific value. Or the distance, which is the km traveled. So this is the physical quantity of the activity causing emission. We call the activity-based data. So this method is the most accurate because it relies on the actual physical quantities. Next is the spend-based data. Spend-based data, this uses money spent as a proxy when physical activity data is not available. For example, the amount of value spent on your courier service, the amount spent on your IT services, the amount spent on cloud hosting, and the amount spent on advertising or professional services. So this is rather useful for scope 3 categories where physical data is right now impossible to obtain. All right, so this second one. The third one is emission factor. An emission factor converts your activity data, which is the first one, into emission. So it is usually expressed as ton CO2e per unit of an activity. For example, ton CO2e kilowatt, ton CO2e per liter, ton CO2e per currency spent. All right, so example, your country grid electricity emission factor, your diesel combustion emission factor, your air freight emission factor, and your waste to landfill factor. These are the factors that we can use. So emission factors must be from credible sources such as IPCC, government datasets, or verified databases. And the next one is the GWP, which is the global warming potential. So GWP tells you how strong each greenhouse gas is compared to carbon dioxide. And so this is required because the emission must be reported in CO2e. But then GWP ensures all gases can be combined into one total number. Now that often the emission sources that you can see already multiply emission with GWP. Therefore, it is easier for us to calculate already. So when selecting an emission factor, they must be from a trusted source, relevant to the real activity, updated from the year being measured, and capable of producing accurate, repeatable results and consistent with the previous reporting method. And in the slides, there are some examples of the emission factors database that you can see. All right, great. So just now we talked about emission factor. Now let's talk about data tier, which is also very important. So the three in your activity data, so there are three main uses of data tiers, which is your activity data. So what are the main uses of data tiers? Number one is to measure how reliable your emission calculation is. So tier 1 is low accuracy, tier 2 is medium accuracy, and tier 3 is high accuracy. So this helps you know whether your numbers are rough estimates or close to the real value. And the second main uses of the data tier is that to guide improvement over time. Data tiers show where you stand today and what you should improve next. The goal is to move from tier 1 to tier 2, then to tier 2 to tier 3 as your data becomes better. And the third main uses is to help meet reporting and verification requirement. So different standards require different data quality. Auditor verification, of course, prefer tier 3. Science-based data target initiative, which is the SBTI, needs good quality data. Carbon credit projects require tier 3. Sustainability reports must show transparent data quality. So data tiers tell auditors and regulators how strong your data is. Okay, so when do you use which tier? So for scope 3, so far, tier 1 is fine, very rough estimates. So what you use global you use the global average emission factor, you use the industry averages, you use the span-based factor, you use the databases that do not reflect your country or your suppliers. So why is it inaccurate? It's because it's global averages, not your own country realities. It does not represent your supplier real footprint, and it's often overestimates or underestimates, not suitable for verification, and high uncertainties. For example, your purchase goods, you use the generic average plastic factor, or the transport, you use the global air freight factors. For business travel, For example, you use the worldwide average factors. So all these are just estimates, which is fine for scope 3 for now. So this one is tier 1. So when do you use tier 2 in scope 3? You can use the country specific, still not precise. For example, if you have your national emission factor, your national logistic averages, your national grid electricity factor, or ASEAN or country level databases. So why is it still not accurate? Because all suppliers operate differently, and different machines, different materials, different fuels, different energy mixes, and national averages cannot represent your actual supply chain as well. So so therefore tier 2 gives the country average, not your real supplier data. Now, let's take a look for if let's say your scope 3 can get tier 3 data. So which is the supplier and activity, which is the most accurate one. So what you use is the supplier specific carbon data, the life cycle assessment, the actual field data from logistic partners, actual energy data from your manufacturers, product carbon footprints, or real measured values. So why tier 3 is the best is because it reflects your real supplier, is the lowest uncertainty, and it's audit ready and needed for your SPTI and required for high quality reporting. For example, for purchased good, supplier gives you carbon footprint per kilo of material. For transport, for example, DHL provides shipment level emission. Your cloud hosting, Amazon Web Services provides actual data centers emission. The manufacturing or original equipment manufacturer provides process level data. Product use, real device energy consumption. Hey, so this is the example given to you at tier 1, at tier 3. Mm. And for most cases, 70 to 95% of the company's emission is actually come from scope 3. So you must always move towards tier 3 to be credible. All right, good. So let's understand a little bit more of GWP, because how you do the calculation is emission data plus your data tier and also your GWP. If your activity data, wait. I Okay, because your emission is time your if sorry, I'm confused. So your emission is your emission factor times your data activity and GWP. Therefore, it's very important for you to understand what is GWP. So let's understand a little bit more. So imagine the earth is inside a room and the gases are like blanket around the room. So some blanket are thin, like linen, so they keep a little bit of heat. Some blankets are very thick, like wool, like down feathers, so they trap a lot more heat. So GWP is a score that tells us how thick each gas blanket is compared to CO2. So when we multiply by GWP, we change everything into the same unit, CO2e, so that we can compare to them fairly. Okay, so now this is the formula. So think of the greenhouse, it's like a blanket, like just now I said. So we use CO2e as the main comparison. So in this slide, we first calculate the ton of gas release, then we multiply it by the GDP. That gives us CO2e, which means if the gases were CO2e, how much CO2 will it feels like? If the gas was CO2, how much the CO2 will it feels like? So that way we can compare all gases using one common number. And so all in all, this is the process. How do we do? Which is the first thing to do is to set your boundary, identify your source, you calculate, and you report. Last but not least is our step 4, which is the report. So the organization should prepare a GHG report even if it is only for internal use. So why? Because a proper GHG report helps organize all data clearly, makes the inventory easier to audit or review, and allow management to understand the results, support decisions on targets, reduction plans, and budgeting. Prepare for future external reporting and prepare for internal or external verification later. And because the report, you need time to prepare. If you do not start now, you start when it's so urgent, it will be too late for you to gather the data already. And so this report must be aligned with the purpose of the inventory, for example, of internal use. Yeah. So, for example, setting your reduction target or reporting to group headquarters, submitting data to an internal sustainability committee, or participating in a voluntary program like CDP, you will need these sets of data. So even if the data is not public, it must still follow a proper structure so that it can be verified if needed. So, like for example, you want to prepare this report for internal purpose. If your organization wants to an independent verifier to check the GHG inventory, or it wants to make a public claim that the inventory follows your ISO 14064-1, and this formal GHG report is required and it's not optional. So the verifier will need the report because it contains your boundary, your data sources, your assumptions, your emission factors, your methodologies, your calculation, your uncertainties, and your final emission totals. So without a proper GHG report, the verifier cannot confirm whether the inventory follows your ISO 14064-1 or not. And so, if the organization have completed the third-party verification, the verifier will issue a verification statement. And this statement explains what was verified, your level of assurance, with whether it is under review, limited, or reasonable. Standard used, which is the standard used to verify is the ISO 14064-3, and verification opinion, whether it is fairly stated, and any limitation or findings. So the organization must then make this verification statement available to the intended user, such as your management, your regulators, customers, investors, or the public. And this ensures transparency and builds trust. And so to ensure the quality of the information, preparers should remember, number one, provide comparative information. What it means, you must show this year's carbon number side by side with the last year number and the most recent available year, unless it is the company's first time reporting. This is number one. Provide comparative information. Number two is you must correct the errors from the previous year. What it means, if you find mistakes in the last year carbon accounting, it's fine. So this year, you explain. If last year you identified wrong emission factor, incorrect activity data, or missing supply data, so you must this year correct the error, reinstate the affected year, and briefly explain the correction. So do not panic if this year report is not a perfect report. It's fine. You can always adjust it and briefly explain the correction in the following year. Why it matters is because the carbon reports build trust through accuracy and transparency. The third one is to minimize the duplication. So avoid repeating the same number and chart and explanation throughout the report, because it confuses and increases the risk of inconsistent figures. And number four is cross-referencing to other reports if conditions are met. So you may point to another report, for example, your annual report, your sustainability report, your CDP disclosure, instead of repeating the data, but only if the reference content is easily accessible, the other report is published at the same time or earlier, or the reference is precise, you got a page, you got a section, or the information is consistent. Okay. Next is the fifth one. The fifth one, which is you have to remember the information disclosed must be material. You only disclose the information that is meaningfully affects the stakeholders' understanding of your climate impact or risk. And number two, you must make sure your information disclosed is connected. So carbon disclosure should not appear as an isolated number. They must link to your strategy, your business model, your risk, your governance, your financial impact, your target and transition plan. So this ensures the carbon report is not just a GHG table, but a coherent narrative. Great. And you must make sure your information disclosed is whether aggregated or disaggregated appropriately. So you must decide when to show the totals and when to break the numbers apart. So you aggregate the number and it's suitable to aggregate it when the total number communicate the message clearly, or the categories are small and not material individually, and combining it does not hide your key risks. Then only you combine the number. You break it into details when a category is material or your stakeholder need deeper transparency and your decision is relying on the granular data, or your emission is differs significantly among regions and operation, then you break it into details. All right, great. That's about it for this one. Next, let's take a look at this case study, which is the Singtel. Eh, great. So you can always download Singtel's case study so that you can take a look at their sustainability reporting. It's one of the sample you can take a look. All right, great. And let's take a look at these metrics and targets. So GHG emission is compulsory under ISSB S2, which is your climate-related disclosure. So the objective of the climate-related financial disclosure on risk management is to enable a user of general purpose financial report to understand an entity's performance in relation to its climate-related risk and opportunity, including the progress towards any climate-related target it has set and any targets it is required to meet by law and regulation. So therefore, you must remember to write it clearly, all your numbers. All right, great. So this is that's about it for our sharing session. Let me see. Okay, we don't have much time already. So if you have any question, let's take a look at the chat box. If all the questions are being answered, great. Okay, I can see all questions are being answered. That's very nice. All right, thank you very much. So before we end the session, a little bit to share with y'all is every Monday we will have different topics for sharing. And today is the 1st of June. You have met me. And the upcoming one, if you're interested, please sign up, which is the 8th of June. We'll talk about the regulatory landscape as a whole in Southeast Asia. And upcoming, we have how SR as a driver of business advantage. And also next we will have Malaysia's NSRF, which is shared by Hing Hing. Please sign up. And so that's all. Let me see. Great, great, great. Please join our community if, let's say, you would like to have connection together with us and want to know more about us. Please connect Hing Hing Hu or Ting Lo. Take a screenshot of this one, connect with us so that we can discuss further. Join our community. This is our QR code so that we can share with you the latest news as soon as we got it.